Greetings, this is Dr. Jeffrey Scott. It is the weekend of September 17th, 2023, and it will be that date when I post this. And this is my weekend market update. If you're new to this presentation, please hit the subscribe and the alarm, and that way, when I put these up on YouTube, you'll get some notification. My email address is hgsidoc@gmail.com, and I'll answer most comments that I get. Please make them constructive. Either send me an email or put them in the remarks section. I title this, Will the Fed Meeting Lead to a Large Sell-Off? Um, I put a question mark there, so I'm not making a statement, I'm asking a question. As always, is for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions that you make. Now, I did a special update a few days ago, which is on YouTube, which I called Heed the Hindi. Um, and I'll probably talk a little bit about the Hindenburg um, on this video as well. But if you don't know what the Hindenburg Omen is, or if you don't think it's meaningful, because I think it is relatively controversial, I make the case, as taught to me by Ian Woodward, of why you should be heeding the Hindi that we saw over the last week, several of them actually. I will be speaking at the Wealth 365 event. I believe it'll be on Tuesday morning, which is the 10th. I will put the link to register in the remarks section on YouTube. I really appreciate you use my link. No cost. I don't get anything if you show up or you don't, but I think you'll find it to be a very useful use of your time with lots of speakers and lots of opportunities to pick up not only some information but some really great tools. Major markets in yellow, I have the indices, and if we go here on the right hand side, we're getting close to lapping the 52-week lows, but you could see the double digits move on each of the major indices, even with recent sell-offs. In fact, the Qs are still up 45% since the October 13th lows. If we look at the week, you could see a small gain for the NYSE composite. Everything else was down. And if you look at Friday, you could see Friday was a tough session. The only things going up were gold, silver, and oil. If you look at the sectors, you could see everything was down on Friday. They look a little bit better than the indices over the 5 days. And you could see that the big laggard, which is still 14% off the 52-week highs, is the utility section. This is the Q Edge tool from Sagar and SuperiorProfit.co. And what it shows me is that Friday was a really weak day. Now, if I showed you Thursday, it was mostly green. But on Friday, all the sectors, 86% of the industry groups, and 76% of the stocks were down. So it was a tough day to make money if you are mostly positioned to the long side. And you could see every sector was down. Now, what's interesting is despite how bad of a session it was, only 3.4% of stocks are below the Bollinger Bands, an equal amount that's above. So there's really no signal on the buckets, except this is a bearish looking picture. And we went from 49% of stocks below the midline to 60. So definitely are looking at a tough session in the market, but we'll talk more about my concerns. If we look again deeper at Friday, you could see we closed in the bottom part of the range of all the indices, and you could see the Qs were down 1.7%. You could see that each of the major indices is below their 50-day moving average, which is new. And you could see the new high, new lows. If you look at over the last month, we are negative on the NYSE, but look how really negative we are on the NASDAQ. And then if you look at one-day change, the only thing that was up on Friday were gold miners. And over 5 days, the leader was gold miners, metal and mining, and consumer discretionary, which is interesting, and solar. Here is the Q Market Breadth tool. And what I wanted to point out was these two skull and crossbones here where the arrowhead is. So we did have a confirmed Hindenburg Omen. Normally you look at the NYSE. This is a roll-up composite that Sagar does. And here they are on the NYSE. And again, I refer you back to that video I did, and I sort of build a case of why that should make us be concerned. Notice we had distribution count of 2 on the major indices, and you could see here the distribution was on the Dow Jones Industrial and on the NASDAQ. Now, the one that is interesting to me is the 13-week new high, new low on the Dow is actually at a level where it's typically reverses. So maybe we got so overbought on Friday, or excuse me, oversold on Friday, we'll see a bounce. But I don't think so. I think that the market's probably going to be do nothing until the Fed speaks. And I'm kind of worried because imagine if the Fed says they're concerned about inflation. Now, somebody is because the private sector has voted. The 10-year was up 1.5%. The 30-year was up 1.82%. At some point, those rates are going to pressure the U.S. stock market. Is there a recession in our near future? The top two say yes, the bottom two say no. The 10-2 on the right, the 10-3 on the left show you a significant yield curve inversion. And each time we've crossed below this dark line, it's been followed by a gray band, which is a recession. So looking at the inverted yield curve, we should have a recession. When do you get the recession? You get the recession when the Fed starts cutting rates and reversing the inversion. Now, going against that is we don't have any sign here on the left of credit tightness. And if we look at economic activity as measured by the Philadelphia Diffusion Index, it popped up. So again, question mark. Will we get a recession someday? Absolutely yes. Maybe it creeps into the first year of the new president or the second term of the two people that are probably going to be running. Market breadth. You can see stocks above on a weekly chart above the 200 and stocks above the 40 actually ticked up on the week. 13-week new high, new low ticked down. So breadth was mixed, clearly not at an oversold level. Looked at the buckets before. This is on Edge Rater, and again, showing me that the majority of stocks are below the midline of their Bollinger Bands, which is not a bullish thing. We did see 3 Hindenburg Omens on the NYSE Common in Edge Rater, so I've got confirmation of the Hindenburgs in Metastock, Edge Rater, HGSI, and on my TradeStation indicator. So the challenge is you want to look at the common stocks, not all the preferred stocks. And there's a lot of variability in the different programs that I look at, and much of it has to do what index you're looking at. When you look at the NASDAQ, no, there hasn't been a Hindenburg confirmed because the August 7th is now off and it was not confirmed. And you could see on the NASDAQ we've got a lot of new lows, and you have to have new highs too. When do you get a Hindenburg Omen? You get a Hindenburg Omen at a period of market volatility, and it's typically before the market falls. 1 out of 4 are substantial falls. Most of them are just minor pullbacks. Rotation out of growth. I take away the head and I take away the tail because there's very few stocks there. This is the number of stocks. And so if you looked at it from here to here, growth underperformed. In fact, if you look at high earnings per share, underperformance. If you look at high relative strength, underperformance. And if you look at most of the different lists that I track, which are growth lists, like the IBD Live Ready list from Friday, or the IBD 50, the MarketSmith 250, and so on and so forth, most of them were red. Again, it looks like we're rotating perhaps out of growth. Know your news and earnings, and this is all about Wednesday. Yeah, some people probably care about home builders. Frankly, it's bizarre to me that they've held up as well as they had, but they look like they may be cracking. Rates are high, but nobody wants to sell their old house. And if we have an undersupply of houses and no one wants to sell their old house because, hey, then I got to refinance at a higher rate, then the builders still have to make new houses. So that might be keeping them up longer than we would have expected. But look at Wednesday, we got Fed decision and Powell conference, and I think that'll be the market moving event. We got jobless claims and economic indicators, and then on Friday, we have an opportunity for three different Fed heads to scare the markets. So I think this is going to be a tough week for the news. Now, there's not a lot of earnings, but we do have things that matter. Specifically, FedEx there is probably the big one that we'll be watching. And there is a home builder, KB Home. Market thoughts, NYC eked out a small gain. The rest were down. The week started pretty strong. Um, and then the back end of the week, is when more movement in the market. Downside moves had the S&P 500 and Nasdaq closed below their 50. That was the big change. I mentioned the confirmed Hindenburg Omen. So this business of one day being up a lot and one day being down a lot is not that unusual. And that's kind of what you see in the Hindenburg Omen signals. Plenty of news, as I mentioned. And so what have I done on my trading? I got less positions. I'm not net short, but I'm a lot less long than I used to be. Anything I'm entering is small potato size, tight stops. I'm playing with a few starter positions, but this is clearly not a time to be overly invested in the market, not after seeing the Hindenburg omens. Again, I'll be speaking live at the Wealth 365 on October 10th, and as we get closer, I'll tell you what my time is. But I think you'll really appreciate it if you sign up, and I'll have the link in the YouTube remarks area. Now, let's start with my weekly timing model. Frankly, it didn't change from last week, despite what we saw in the market. If you look at the spiders, price is above the WMA, Bongo is green. So despite what I'm going to talk about over the next few minutes, technically I'm still in a buy signal. If I look at the Qs, I've been nervous about the Qs for a couple of weeks because the Bongo's gone red, but we haven't dropped below the WMA. I put a caution sign there, and maybe I shouldn't even have the down arrow because you know what? It's caution. The Russell, which has been the weakest of all of them, had price below the WMA and a red bongo, so that gets a down signal. And then similar to the spiders, the diamonds are above with green and they keep the arrow. So really minimal to no change from the prior week. I'm still nervous. My conviction is less. Um, but we haven't seen a big sell-off in the market yet either. If I look at the major indices, let's just blow this up and start looking at the Spider 5 minutes on Friday. We gapped down, traded down the whole session. That is not a very attractive looking market by any means. If we look at the daily chart, you could see a pretty hard fail at the 50, closing near the low of the session, a EMS signal to the downside, lots of volume, although I might discount the volume just a little bit. And the reason for that is it was triple witching, so there was a lot of options expiration and moves related to that. Have we broken down here? No, we haven't broken down. We could still go down to 433 and bounce, and a couple percent from here, and just as long as we're above that, we could still have higher lows. So I think that I'm concerned. It's pressured. I feel like we're going lower, but we haven't broken, at least on the spider. And you can see the MACD is still green, although it looks like it's turning over. If we look at the Qs, we see a similar candle breaking the 50 on volume. If we look at the diamonds, we broke the 50 as well. So each of the three major indices lost their 50-day. The Russell's been nowhere close for a while, and it's bouncing around on support at the 200. The VIX had a happy day on Friday with a big move, 7.5%. Why? Because the markets were under pressure. And on the weekly, you could see it was actually down, mostly flat, but down a small amount. And then lastly, the dollar, which is not our friend if you're long equities, has broken out above what I thought might be resistance going back here to March. And it's right at the recent highs. It came off a little bit less than 0.1% on Friday. Strong dollar, still concerning. Look at commodities. Despite the dollar holding up, gold had a big move on Friday, failed at the 50, came back down to the 200, and you have this similar type of a candle appearance, although not playing with moving averages on silver. Oil continues to be the big mover and probably a driver of some of the concerns about inflation. And you could see it has was up 0.21, and it's at a if it's higher than it was the prior day, then it's at a multi month high going all the way back to 2022. So something to be concerned about is oil. So oil, the dollar, not natural gas, but let's look at 10-year here. The 10-year is very concerning. Yeah, we had a doji, and that could be a reversal. It's in this range, which I have hoped would hold us, because if we break above this range, we're seeing territory we haven't seen since 2007. So three concerns on the market before I even talk any more about the Fed. Concern number one, the dollar. Concern number two, the price of oil. And concern number three, the 10-year and 30-year. So I think it's hard for me to be excited about being long here, and that's even before I throw in the Hindenburg Omen. Now, on my stocks and docs last week, I put these yield signs here on utilities and staples because I thought we'd start to see them move up, especially if the markets were starting to show some weakness. And they did move up. So that's a rotation into defensive. But saying that, and even though technology has taken a dump, energy is still strong, financials look good, even real estate look better. Um, Not much on materials, energy good, as I said, financials, industrials are weak. Um, so there has been rotation, so not a big surprise when I go back to that group performance where growth was not in vogue because some of these laggards are starting to move up. Then I get to the scanners, and you want to see an ugly day? I'll show you an ugly day. Let's look at the heat map, and let's look at the S&P 500 from Friday. It's hard to find many places to hide. And Oracle had been down a lot on earnings, so it was, it's bouncing, but it's still way off of where it was when the week ended the prior week. So clearly a week. God, that sounds horrible. A soft week in the U.S. markets and a soft day on Friday. If I go into Wealth Scanner, and I thought this was interesting. The only thing 800 above is oil. Oil, commodities, metals and minings, insurance at 755, the dollar, short the bonds, financials, energy, pharma. But I'm going to ignore everything below 700. So now I'm looking at gold, I'm looking at miners, the dollar, and energy. And when do you see the dollar and oil running together, or the dollar and commodities running together? I think that's unusual. Frankly, it's very unusual to me. Um, so now let's just flip this and just look at what's to the downside, what's leading. Except for the Russell, the market really hasn't broken down. But what's lagging, aerospace, industrials, Russell, shocker, biotech, semiconductors, and semiconductors or a number of them that rolled over. Um, can you be shorting this market? You can, I just not fast enough. And like I said, I really think the Fed's going to be a potential market moving news. So I'd rather be raising cash and not putting much at risk going into the Fed. My title about will it lead to a market going down? Think about the dollar, oil, rates, the Hindenburg Omens, and the fact that if anything, the recent financial data has been a little bit hot. Fed could really sink this market with a few bad comments like see no reason for easing, concern that we have to raise or raise right now. And oh, by the way, I saw some headlines over the weekend talking about hyperinflation in Europe, and that's going to impact, I think, on the Fed as well. So I want to keep this a short one because I think the story is really in the market. But I know people are going to want to know things that they can look at to the long side. And there were some things that I thought looked interesting. So let's first look at energy. because energy remains the leader, and see if anything has any dots. So energy's been running. So when they've been running, we can look at Liberty, which I think we highlighted maybe a week ago, 10 days ago. 2 weeks ago, you could see it had a nice move up and a straight move. But, do I want to buy this up here? Probably not. It's extended. Warrior Met Coal. I mean, coal's been on fire. I'm playing CEIX, and I've lightened my position because, like Met Coal, let's put CEIX on CEIX. Of course, there are too many C's. Here we go. What a run. And, don't like this candle on Friday, hence I took a little bit off. GPRK is another one that made my list. Now, this one is not extended. I'd have to do some more research on it. But look at this, a little bit of a breakout. Actually, over the last couple of days, it's been moving in a squeeze. Look at relative strength in OBV. But really, is this a leader? No, it's not a leader. It's trading well below the 200-day moving average. Another thing I could apply this to is, what about for those of us that are fans of William O'Neill and want to look at high relative strength leaders? I get Remedy Global. And if I had to make a long pick of the weekend, this one is interesting to me. Why is it interesting to me? Big run up, sideways move, and it looks like on Friday it had a massively high volume breakout. Now back here is earnings. And earnings back here weren't so hot, but they actually were hot because even though it says a minus surprise, it lost money, so it lost less. It was actually a nickel favorable. And then you had a bunch of upgrades, 25, 28, 25. That's not that exciting. Up here raised to 34, JP Morgan. That's a real broker, real bank. So here's a little pullback and there, and now the stock is moving. RELY looks interesting to me. Then you've got a bunch of these financial investment, whether they're mortgage or asset managers. So, for example, KKR, which is a position that I'm actually in long, is breaking out here. Now, it's well off its previous highs, but look at the volume that's come into the stock relative strength in OBV. Is this a good buy point? No. Aries is another one. Maybe a little bit better buy point if it takes out. I mean, you could certainly, without making stuff up, probably put some kind of a trend line in here and say, hey, if you break out of that, maybe I want to take a look further at ARES. Or I could look at my combo leader list and rank them by dots. Axis Capital, here's another one of these asset managers. Sort of a broke out of a sideways move. I don't like where it closed. Good volume, a breakout and momentum dot coming out of a squeeze. Don't know anything about it. There were some small biotechs that looked interesting, but these, right now I'm not sure I'd be chasing these going into the Fed meeting because these are people that like to get financing. But here's one going sideways. Looks like it's trying to break out. Here's RELY, which to me, this is a leader. The others were not. Apollo Commercial Real Estate. A lot of these mortgage bankers and and some of the REITs look strong. Lots of volume. Took out the 50. Volume and breakout had momentum the prior session. Relative strength in OBV. There's a reason why these things come up to the top, and that's because they're giving us some good signals. Notice there's nothing with 4, and there's very few with any signals at all. So I don't want to give you the impression that this is a market to go out shopping, because to me this is a very dangerous market we're in, to the long and the short side. If I look at some of the stocks that I thought were interesting, again, a lot of these stocks are asset managers. Here's a raise, a pullback to the 50, and a breakout for Alliance Bernstein Holdings. What's not good about it, it's below the 200. Arbor Realty is another one that's in the same area, real estate. Abercrombie and Fitch, it's got, did I just break out of the flag here? Something to watch. APP, not apps, Kathy, but app lovin'. Pull back in, looks like it's ready to move. Um, CCJ, this is one we've talked about several times on the stocks and docs. Don't like the candle on Friday, but boy, what a leader this has been. Carlyle Group, another one of these asset managers, looks like it's trying to break out. Coty, I think they make cosmetics. Take out the 50 on massive volume, and it doesn't look like it was earnings. Earnings were back here, but that's a pretty impressive move. Here's that Geopark I mentioned. Mag Silver, you know, the gold silver complex are beat up, but they were some of the things that were moving, and I like the volume that came into that this weekend. Talked about GSK earlier in the week or last weekend, and after a little flag here, it broke out. Probably a little late to be chasing it. How about Melly? It's pulled back. Is it ready to run? Certainly on my watch list. So even Rivian Motors looks interesting here. Nothing really came out and said, I have a perfect chart pattern and you need to buy me. But the ones I like the best, one of them is RELY, and the other one is XPRO, which is an energy stock in the services. And you could probably draw a line right here, and we took out the prior high. And I wonder if this is a IPO, but if I look at a monthly chart, not, it's come way off of its highs. So here's one that looks like it's ready to move or started moving as well. So that's what I like to the long side. To the short side, I call it a screen. I'm not short in any of these stocks, so don't go out there and short just because they're on my list. But these are some of the stocks that I think the market has risk. I mean, Deckers failed the 50 multiple days trying to get there, took out the 17. This thing could come all the way down to 460. That's another 12% drop. Big volume move if this market rolls over. FNGU, this thing looks heavy. It broke down, failed the 50 and the 17. I mean, how much can this thing drop if the market rolls over? Even Lilly, now, I'm not shorting Lilly. I don't short all-time highs. But my God, this thing has had such a run, and this is not a strong-looking pattern there, nor is that a nice-looking weekly candle. You want to see what semiconductors? LRCX, that's a breakdown. How about NVIDIA? That one's breaking down. So a lot of these are great stocks that have been leaders. And maybe this will turn out to be all buys because the market rallies and we can buy them on the cheap. Look at Sherwin-Williams. To me, this is a derivative of housing. You got to paint houses. How about Home Depot breaking down? Vulcan Cement breaking down. Advanced Drainage breaking down. And even SMCI, a darling, looks like it may want to retest its earnings miss lows. So I think this is a dangerous market. Now, if all these things come out of Monday and Tuesday much higher, and we have a Fed that's neutral, I don't think any of these are shorts. I think they're all going to rally. But if this market drops, this is going to give me that signal. And, you know, putting NVIDIA on a list of concern is always feels silly. But here's down here, one of these candles. So say 148 was January of 2023. We're at 439. It could drop 200 points and still be up massively. So do I think that's going to happen? No. So what's my message as I say goodbye on this relatively short video? Danger, Will Robinson. Go look at my Hindi videos. It's okay to play this market, but be careful. And don't forget we got the Fed coming. And I'm going to be watching for signals of some of these fallen angels. If they don't rally this week on the news, I think we got more reasons to be concerned. Have an awesome week. I hope to see you at the Well 365.